Let's go back to our top story here today. We are following the activity on Wall Street and the global markets today as they plunge throughout the day.
That sell-off was triggered by Friday's July jobs report and fears of a slowing U.S. economy. Craig Bolanos is the founder and CEO of the Wealth Management Group in Inverness and Downers Grove. He's here to explain as best as anyone can explain what's going on with the markets. Is this as simple as hiring slowing down last month?
It's as simple as a confluence of a couple of things. It is clear based on the data points from the last several months, topped off with Friday's job report, that the economy is slowing more than people had expected. And anytime expectations are misaligned with prices on Wall Street, we get a bout of volatility. Some people call it a dip, some will call it a correction, but it's literally that simple, Ben.
So that data point, just one factor in all of this. Okay, so what does the Fed do now? Because I would imagine they react to what happened today here on Wall Street. So what are your thoughts?
Well, I think the Fed doesn't react to today's movement in Wall Street. 1,000 points on the Dow, 3% down is not what it used to be. I think what the Federal does do, though, is Jerome Powell comments and says, hey, we're going to cut rates in September. We're going to take a look, and if the data remains soft, we'll even cut rates in November and do it again in December. And that's got implications for savers, implications for investors. But I think the Federal Reserve is going to be ahead of this. I think they knew the slowdown was coming, and that's the reason for their tone, and the rate changes are soon to occur.
Put this in perspective for us, because it wasn't that long ago we were talking about the markets hitting record highs.
Well, this is normal, Ben, Lourdes. This is just a part of investing. You and I have talked before on your program to the listening audience, our viewers, that having a 5% dip in the market 2 to 4 times a year is basic table stakes. Having a correction defined as a movement down from the all-time high prices of 10%, that happens on average every 12 to 14 months. And I think we've talked that there's a seasonality. Typically in these election years, in August, September, and October, the market goes through a slowdown. And then typically, as long as markets were up still for the year going into an election, things tend to firm and move positive coming into the end of the year. I think that's exactly what this market's on pace to continue to do.
And obviously, I know you don't have a crystal ball and can't tell us exactly what's going to happen tomorrow, obviously. But if you had to predict sort of when we wake up tomorrow, what will we see? Will that dip continue? Or do you think it'll sort of go up and down here for the next week?
Well, Lourdes, I just gave you my outlook for the rest of the year, but you asked for my outlook tomorrow. Here's what it is. I think the fact that we're talking about this on TV, we're discussing it on radio, everyone's woken up that we can't be complacent with our investments anymore. Everybody needs to have a plan. I have yet to see panic set in. Corrections typically end once everyone wakes up in the morning and hits the sell button. So I think we're going to see some downward movement in the days to come. But I think the bottom is actually relatively close to where we sit today, and that should make long-term investors and intermediate-term investors a lot more comfortable going into their dinner conversation this evening.
And it's another reminder today, probably not the day to check on your 401k, right? And also not the time to panic.
You know what? Being prepared and flexible is the hallmark of a key and a successful investor. And Ben, you said it, panic has no place when it comes to long-term investing. So if you have money that you're using inside of the next year or so, that should be parked in a high-yield savings account, a treasury bill, or a CD. But if you're investing for college or your future retirement, then no, you should be continuing to add to your 401k plan, stick to your direct deposits, and this too shall pass.
All right, Craig Bolanos, thank you for joining us and giving us your insight this afternoon. You can check out Wealth Management Group in Inverness and Downers Grove and online at investwithwmg.com.